Welcome to Let's Talk Investing, a co-production of the Globe and Mail and the Investor Education Fund. I'm Rob Carrick, personal finance columnist at the Globe and Mail, and with me is Dr. David Stanley. David is an ex-psychology professor who has become an expert in dividend investing, and he's a frequent contributor to the Canadian Money Saver magazine on the topic of dividend investing. David, I keep hearing it over and over again, buy dividend stocks, dividends are wonderful. Could you please outline for me some of the key benefits of owning dividend-paying shares?
Sure, Rob. Thanks for having me. First, let me say it's kind of the flavor of the month now. Every writer in the blogosphere is involved with that.
I think people were scared by the financial crisis and they're looking for certainties and they think maybe dividend stocks are certainties, but are they?
Yes, well, that's the problem, you see. Now, hopefully when we come out of this, things will be better and people are going to forget about dividends, and I think that's a shame. Dividend investing, of course, has been around for a long time, and you always see it reemerge when we have some type of financial crisis, but it's done really well over the years.
What is it about dividend-paying shares that rewards investors?
I think one of the most important things is that they're able to reinvest their dividends over a long period of time, and they get this aspect of compounding going, and that's so important for an individual investor.
That's where you take your dividends and you apply them to buy other investments or more shares of the shares you already own.
Sure, like through a drip plan.
You know, I don't think people understand the benefits of having cash coming in every quarter. No matter what the share price does, up or down, a dividend stock puts money in your account every quarter, and that's, you know, that is huge. That's, I mean, the return on your dividends can be what? What's a typical dividend yield for a Canadian dividend stock?
Oh, maybe 4 or 5%.
Now, what are GICs paying right now?
Well, exactly. Or what do they pay you for your savings account? Not much, eh?
Exactly. And talk to us about the dividend tax credit, which gives you an even bigger boost on your dividends.
Oh, sure. That's an even better thing. When you earn interest, of course, it's taxed the same way as if you were earning salary, but you get a big break when you have dividends that you can put on your tax return.
So in your non-registered account, a dollar of dividends is worth a lot more than a dollar of interest.
Oh, you bet. Last
question, David. Can people be more confident about dividend-paying shares than they can be about sort of the rank-and-file stocks that are out there?
Over the years, there's no doubt about the fact that dividend-paying shares have certainly done better than non-dividend-paying shares, and especially the ones that increase their dividends over time.
All right. Many thanks, David.